Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report from FDCTech, and trust me, this one has more twist than a pretzel. It involves auditor changes, and when those happen, it's worth paying attention. We will check what it means for FDCT's future. This is a Form 8K filing. In simple words, it's a current report company's file to announce major events that shareholders should know about. Think of it as an "oh, something happened" report. In this case, it's about a change in accountants, which is like changing your doctor suddenly, usually not a great sign unless your doctor was prescribing leeches. The main event here is that FDCTech fired their previous accounting firm, Olayinka Oyebola & Co. and hired a new one, Lao Professionals. Accounting firms are like referees, making sure the numbers are correct and fair. When a company switches referees, we need to ask why. FDCTech says they dumped Olayinka because the OTC Markets Group, which is like a stock market for smaller companies, flagged Olayinka as a prohibited service provider. Basically, the OTC didn't trust Olayinka. That's not a good look. The company retained Olayinka for less than a year. During that time, Olayinka audited the financial statements for 2023 and 2024 and reviewed the quarterly reports. FDCT claims there were no disagreements with Olayinka about how to count the money or how to show it in the financial statements. They're saying everything was fine, but they still had to switch because of the OTC's decision. The company gave Olayinka a written description of the situation and asked them to agree with what the company was saying to the Securities and Exchange Commission. SEC Olayinka agreed. It's like saying, yeah, we agree we were fired for something outside our control. Now, who is the new referee? Lao Professionals or LAO is in. FDCTech says they didn't talk to LAO about any tricky accounting questions before hiring them. That is, they didn't shop around for an auditor who would agree with their numbers. The company claims they never consulted LAO about the application of accounting principles or the type of audit opinion. They're saying that they didn't try to influence or get a preliminary okay from LAO before hiring them. The filing also includes a letter from Olayinka, the fired accounting firm. It's Exhibit 16.1. Also, there's some computer code attached, which is not particularly interesting. This letter would confirm that Olayinka agrees with the company's explanation for why they were let go. It's a formality, but important for keeping things transparent with the SEC. And now let's take a step back and think about what this all means. The biggest concern here is the dismissal of Olayinka because of the OTC Markets Group's decision. It raises a red flag because it suggests that someone somewhere has doubts about the reliability of the previous accounting firm, and that immediately casts a shadow on the financial statements they already signed off on. Investors might start wondering if the numbers from the past 2 years can be trusted. The company says there were no disagreements with Olayinka, and Olayinka confirms this in a letter. But even if there were no specific disagreements, the fact remains that the company had to switch auditors because the OTC deemed Olayinka a prohibited service provider. It is possible that the OTC had good reasons for their decision that have nothing to do with FDCT's financial reporting. But it's also possible that this is a symptom of deeper problems. Hiring a new accounting firm, LAO Professionals, might bring a fresh set of eyes and reassure investors. However, it's crucial that LAO conducts a thorough review of FDCTech's financials and doesn't simply rubber stamp the previous work. Overall, this report raises more questions than it answers. While FDCTech has followed the proper procedures in disclosing the order to change, the underlying reason for the change is troubling. FDCT needs to proactively address these concerns and demonstrate to investors that its financial reporting is reliable and transparent. Otherwise, this auditor switch could become a major headache for the company. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives. Until next time.